Welcome back, and joining us now for today's Markets Read is Jordan Toy from Legacy Family Wealth. Jordan, thanks so much for your time today. The precious metals sell-off really hitting local markets. I mean, it was just last week where the all share was trading above 126,000 points. Today, here we are below 120,000 points, of course, on the back of lower PGM prices, lower gold prices, and lower silver prices. What are you making of these big moves? How are you navigating markets at this point, right? We are seeing this big correction playing out.
Look, so I mean, it's never easy, and in the same vein, SA indexes as well as our individual miners have benefited significantly when those prices were on the way up, and equally so, you feel the pain on the way down. So a pretty violent reversal in both gold and silver, as well as platinum and some other metals over the last couple of days. So that's naturally to be expected to a degree. I mean, we know resources are inherently quite cyclical, and a bit of speculation potentially in the mix there as well. Pleasingly, though, that the flip side to that coin is that we've seen a little bit more dollar strength, marginal dollar strength, which helps for some of our investors with offshore assets. So look, it's never an easy environment to navigate, but I think that's always got to be in the back of your mind when you're looking at, a commodity-driven economy and an index that's composed of so many commodity-linked companies. On the, outside of that, we've obviously got a lot of international news going on this week. We have US earnings on the go, some manufacturing data, some payrolls data later this week as well. So a lot going on in markets.
A lot going on. And the last time I checked, I think gold was up 0.5%. And I have to ask you, is this an opportunity to buy the dip? Because it does seem like those precious metals are clawing back some of those losses.
Look, for sure. I mean, my question would be, what is your time frame? So if you zoom out, it won't look like nearly as much of a dip as it does if you are taking a much more zoomed in view. Look, I think my personal opinion, where gold and silver are sitting at the moment, it's very highly priced in the sense of the smallest bit of news. We've seen the drastic movement that can have on those prices. So I would be hesitant to be entering new positions. I mean, timing is always difficult, but there is, in my view, a lot of speculative sort of not investing, but a lot of speculation going on in both gold and silver at the moment. And quite a lot of volatility. So be very careful in terms of the positions you look to take in any of those commodities at this stage.
Yeah, now, as you mentioned, a lot happening across the globe, a lot happening here at home, earnings season in full swing. We also got President Trump announcing his pick for the Fed chair position, that being Kevin Warsh. Talk me through how markets are digesting the move and whether it suggests that we could be in for easier monetary policy moving forward.
So it's a great question, and I think one that asset managers and investment managers the world over have been poring over for the last couple of days since we had that announcement on Friday. So, I mean, the short list of candidates was made up of a pretty hard-hitting list of people with experience, expertise, etc. I mean, Warsh is a previous Fed governor. He served under George Bush from 2006 to 2011, and he has a lot of credibility and experience. I think he went to Harvard as well as at Stanford, so education experience is there. So I think from that perspective, he's a good pick. In terms of what he might do is a much more challenging question to answer, right? So we know that the US president has been pretty vocal around his pick. He expects his pick to cut interest rates. And there's been some commentary out of Kevin Warsh that indicates that he might be open to some shorter term rate cuts. But if we sort of turn the page back and look at what did he do or what were his views when he was previously a Fed governor, and he's been a pretty vocal critic in the past of the quantitative easing that the Fed undertook around the 2008 financial crisis, the large-scale purchases that the central bank was undertaking. In fact, that the second round of quantitative easing was actually, he was so much against it that was one of the main reasons that he resigned as a Federal Reserve governor. So on one hand, you've got him being a pretty vocal critic of quantitative easing and the expansion of the Fed's balance sheet. And then on the flip side of that, you have him seeming to be a bit more open to short-term rate cuts and that he feels that the economy is in a position that it can handle that. So that's a little bit less clear at this stage. What's important is whether he will preserve that independence of the Federal Reserve. And I think US President Trump actually mentioned it. He said, look, you can appoint people and they say the right stuff when they're being interviewed, and then when they've got the job, they change their story. So we'll have to see. I think for me, like a key takeaway is, and we're constantly advising our clients to, be careful of the hype. And while it's tempting to sort of dive headfirst into, winning trades like gold or silver, these crowded trades, and obviously this is some of the movements in gold and silver are driven by what we've seen happening with this Federal Reserve pick. They're crowded trades. It's a very easy way to destroy capital. You have a 30% wipeout in silver in a couple of days. So I think it's just, for me, it's a point to emphasize the disciplined process over, chasing some of that emotional momentum.
Yeah, the jury really is out on whether we're going to get a hawkish dove or a dovish hawk. Let's get into ShopRite quickly before I get into your stock pick. What did you make of the update, the operational update? It did seem like markets were not impressed with that, with numbers missing expectations.
Yeah, so I thought a reasonable update out of ShopRite. The market, as you mentioned, a little bit seeming to be a bit disappointed. I saw when I last looked, the share was down around 1%. I don't know where it's at exactly at the moment. But I mean, just a couple of headline figures that jumped out at me there was the market share machine is still moving along strongly there. I mean, their supermarkets growth was, well, according to their figures, 2.3 times the rest of the market's growth in market share, which is obviously a really strong number. And I mean, that's the kind of competitive edge we, or any investment manager really, who's picking JSE listed investments is looking to see, right? You want to see someone who's dominant in their field. We had strong digital growth numbers. I heard you mention it in your introduction there as well. So 60-60, obviously the market leader, but they still grew digital sales by nearly 35%. So, you've got them maintaining their position in that digital space. And competitors are definitely coming for them, right? We know Woolies Dash has had some strong growth as well. On some of the points that I was keeping an eye on as well, internal inflation. So their internal selling price inflation was only 0.7% versus, food inflation running at over 4%. So that's something to keep an eye on in the sense of the like-for-like sales growth, and are we seeing internal price deflation, and does that start having an impact on margins?
Yeah.
So obviously, you've got to back the management team there to do the right things. They obviously understand exactly that the business they're in very well, hence their massive growth over the last couple of years. But there can be a margin impact if you don't make up for that in the volumes. So I think that's something that the market's keeping a close eye on, and just that like-for-like sales growth being a bit modest at around 2%.
All right, we're going to have to leave it there. Unfortunately, we do not have time to take your stock picks. One thing about you and we will yap and yap. Jordan, thank you so much for your time and joining us this evening to take us through the day's markets action. That was Jordan Toy from Legacy Family Wealth.